What is up, YouTube? Welcome back to Stocks by the Numbers, and today, as per request in the personal Discord, I wanted to take a look at something that someone threw out there for us. Lovesac Company. Lovesac, baby, Lovesac. Ticker symbol LOVE, Love, listed here on the NASDAQ. Stock a little over 21.08 here on the day, down 11 cents, roughly about 0.5% here on the day. Company hit a new 52-week low not too far back, down at 1760, and in my opinion, they do have some decent numbers coming in. The chart seems to be mostly in like a stable trend, or usually an uptrend really overall, and we're going to see what's going on. We're going to check out some of the numbers. We're going to look at some of our trend lines here and see what could potentially be happening. Now, first of all, you see like this double bottom here. I saw this and I just kind of drew a line and just extended that out to the left and to the right. And you can see, look at all of that action right as the company went public, basically. Back in mid-2018, you can see a lot of candles bouncing and breaking, resisting and supporting off of this trend line. And then obviously if you push it through here, you see more price action along the way. And of course, as of late, it's really been fighting and bouncing up and down around this trend line. However, going back to, looks like, about October, November, so roughly about 6 months ago, you can see that we kind of been in like this upwards M, right? So the stock is like slowly climbing back up. Is it going to get up to 90 anytime soon? I don't know about that. However, seeing a little pop, here maybe from like 21 up until like the 24s, 25s, which incidentally, is right where the trend line is, 25.18, 25.30, right? So chances are, in my opinion, we're probably going to retest that, but this purple line at the top is basically like the all-time high trend line for the most part, and this down here, you can see how this is the lowest candle, and then it kind of like goes upward like that. Now, of course, I had to draw it to the new recent lows, really, but really nothing too crazy here. I mean, I guess you can say they're kind of trending inward while rising. So in the long term, 4 or 5 years down the road, these two purple lines could turn the stock into a long-term rising wedge, which obviously, as you can see, looking at the numbers up here, is probably going to slowly climb for you and make you money. However, of course, you could turn around in 5 years and have like a massive sell-off. But again, it's really all about the numbers when you really think about it. But more importantly, you can see the stock was here at the highs here into 19, and then they kind of just sold it off because, of course, the stock at the time, even though the revenue was coming in, and they were probably coming in above estimates because the company has a decent track record here. We'll get to that in a minute, but chances are obviously overvalued, so, they began selling it off, volatility of the market, and then boom, you had the big sell-off at the end of 19 going into a pandemic, and then of course you have your lows here all the way down at $3-4 a share, and then they ran this sumbitch north of $90 a share, basically June 21, March 20, right? So if you stepped in, you bought that stock and held it for 15 months, I was almost going to say 15 years, you held that for 15 months, you're going from $4 up to $90 a share. Insane returns. Insane. If any of you were involved, obviously, congratulations. That's a phenomenal return right there. But as we can see, a little too high, hits our top trend line, and then kind of just begins pulling back, selling off here in this downward channel. You can see the bounces again coming in at our key trend line that goes all the way back to inception, and you can see multiple bounces and stuff. So that's really going to be our level. But again, the orange trend lines, as you see, this kind of brings it back to like these highs and lows going back to like October, November, and you can see basically the stock's in like this upward channel. Now, of course, it could break. However, in my opinion, again, they hit this new 52-week low of 1760, went up, retested it, and then just kind of like ran from there. Again, it came back down into like the low 20s here to retest this fib, but again, multiple bounces here off this bottom trend line, and consistent pops back up and closes above the trend line. So of course, within the next couple of days, I mean, they could break the trend lines and bring it back down to 1716 and completely screw over everyone who's long or anyone who stepped in and bought calls. But overall, the company actually has a pretty decent track record. So again, I wanted to go over just a couple of things the chart was showing us, but really not telling us much here. Again, this is the high coming out of the pandemic, and then this is the low it pulled back to. If you draw those trend lines out, the dark blue ones, you can see the stock is really in a trumpet pattern technically. But even if you want to move it like over here, right? Even if you want to go from there, I mean, you're still in a widening trumpet pattern overall, not really knowing what's going on. And then that's what I mean. You see the stabilization around this trend line, which, as you see, is slowly increasing over the years, right? It's going up. So what that means is down the road, right, if we bounce around, let's just say we come to, here, it's going to bounce off the trend line. Look at it up here, 27.30, right? Where is it now? About 25.20, 25.30, where the stock, in my opinion, is going to bounce and pop up to. But again, you go back here, look, 22.85. Down here, look, 21.30. When we first started, 20.07, right? So that's why if you go, oh no, wait. Yeah, 2018. And see, look at the end here. Look, we're going into 25, 26. Look, and it's up to 27, 28. So that's actually a really good sign. So if this is like its own trend line, kind of making its own moving average, if you will, slowly increasing with the stock over the years, that's actually going to be a really great scenario because, again, as you see, we are just slightly below the trend line here. And the last time we really broke down was, again, you had, some volatility in 2019. Who knows what the company said, or if someone downgraded the stock, or, stepped in and took a big short position, honestly. I really don't need to go back and look at the history. I'm sure someone in the comments section is going to let us know, because either way, it really doesn't matter, because it immediately bounced back up and rallied back up and bounced off the trend line and went even higher than where it was before the break. So obviously, in my opinion, little of a overreaction in the short term, that turned out, again, to not really hold water in the long term. But, kind of just all over the place here right now. But as you can see, again, we're in like this upward channel, and you can see we came down. We're sitting here at a little over 21, and if we rally up right there, it's going to be about 25, as you see there, 25.04, 25.20. But more importantly, if we zoom in and look at the chart, look what's coming up. We have earnings coming up. Right, so they recently brought the stock down. Again, the market's been kind of uncertain for the last couple of days. We'll randomly rally, we'll randomly pull back and have a red day. Shout out to everyone in Discord. I said to step in and take a position in Verizon. You can see right there, 2% pop, was up 3% at one point, and that's what I mean. But you have to just buy, look for these distressed companies. And when it comes to Love, I think we do have something here, because even if we go back, look at this, $238 million in the quarter, coming in with about a 10% surprise. The company is usually beating on the EPS side and even on the revenue side if you go back several quarters here. But you can see too, look at this, down at 115, 130 million, but then it just keeps rising, 140, little pullback to 138, boom, breakout to 238. Now estimates of only 133, right? So they're assuming it's going to be a rough quarter, and this is what happened 1 year ago, right? So this time last year, period ending April 22, you can see a very nice beat on the EPS side, and of course, just smashing estimates on the revenue side as well. And now we come back here, April of 23, and you can see last year they reported 129 million, estimates coming in for 133 million. So if everything consistently grows and goes according to plan, the company technically, on paper, should beat these earnings estimates. And you can see, look at the EPS estimates of minus 41.5 cents. So even if the company did have some bleeding in this quarter, hopefully they can keep it above that range and have the estimates come out with a nice beat on the EPS side there. The earnings, excuse me, not the estimates. They can have the earnings come out above estimates on the EPS side, and of course that would be awesome. But of course the revenue is really where it's at as well. And you can see how it just bounced down and like just retested these trend lines, and now it's like slowly climbing. And you have a couple of days here. We're May 31st, earnings June 7th, right? So 1 week from today. So you're going to have Thursday, Friday, and then like Monday, Tuesday, Wednesday. And that's what I'm saying. Like maybe Thursday, Friday, they can try to bring it down again and retest the trend line. But in my opinion, it's going to bounce off of that and probably rally for a couple of days going into earnings. And chances are the company's going to beat earnings. And that's why I'm saying in the short term, in my opinion, I do believe that the stock will most likely go from 21, or even if it drops down to 20 again, it'll go from that 2021 level, and it'll rally and probably pop on these earnings and most likely get back to that $25 level. Now, I know it seems extreme. However, 4 points on a $21 stock, we're only talking about a 20% pop, and this company is not currently paying a dividend. So definitely doable. We come down here, we look at some of the numbers. Look at the market cap here, 320 million. Company brought in 240 last quarter, basically. But, of course, the numbers are a little sporadic, and it seems like Q4, period ending January 23, right? So that's Q4, including really the last couple of months of 22 as well as January. So, chances are, I mean, that does make sense. I guess November, December time, right? People would go out maybe like on a Black Friday or something, and they would buy furniture. Or Christmas time, obviously, you want to do something nice. Boom, you get a new little couch or sofa, whatever the hell they do. But this company does do some crazy stuff. They have like wireless charging, and there's like speakers in the couch and whatnot. So obviously, with the way younger people are, these are good add-ons, good little positive buffs to your furniture, right? So younger people and even older people who obviously appreciate technology are going to be buying furniture like this. And that's what you can see in the numbers. Again, even if we back it all the way up here, again, some of these numbers are sporadic, 130 and then comes in 148. But just look at the beats. Just look at that beat right there, 12.5% above estimates. Look, just always consistently coming in above these analyst expectations. And it's like, even if they want to explode the growth estimates on the revenue side, chances are the company will most likely still beat earnings. I mean, look, we're going back several years now before we're even seeing red. Okay, this is like the worst quarter on record, and look when it was, right? We're talking period ending October 19. That's when markets were really getting smacked up. And, again, it could be tied to anything. It could be tied to anything. But right before that was a great quarter, and then you go before, look, miss on the EPS side, but again, another beat on the revenue side. Before that was a double beat. Before that was a double beat. First ever quarter beat on the revenue side, slight miss by a couple of cents there on the EPS side, right? So if we add up all those quarters, we had like, what, 3 with hiccups out of 6, 9, 12, 15, 18. We're going on the 20th quarter, and only really like 2 of them have been bad. So, again, these are the types of companies you want to look for, right? That's why. So, shout out to the Discord, throwing this out to us, because a lot of these numbers are lining up. And again, of course, if we do our simple market cap to revenue comparison, right now you can also see we got a PE down at 12. That's probably pretty cheap. But only about 13.5 million shares in the float. So, that's interesting as well, right? Because, again, like I always try to bring up like these Reddit stocks and these meme stocks and these forums. And it makes me laugh because something like this is what you guys should get behind, in my opinion. I mean, you only have like 13 million shares. If everyone pulls their money together, you could probably double and triple the market cap easily, and just take control of basically the entire float for the most part and just buy and go long and hold. Make it a widely held stock. And, again, revenues just consistently keep growing. These are the stocks that you guys should be piling into, not just some random ABC symbol because the short interest is high. And again, you're looking for the next GameStop or some nonsense. Can it be nice? Yeah, it could be nice. However, again, at the same time, chances are the institutions probably aren't too heavily involved in this stock. And that's what I'm saying. That this is another way to flip the script. However, you're doing it on the inverse side, as opposed to looking for something with very high short interest and forcing a squeeze. You can actually find something that has lower overall interest, that's flying underneath the radar, that is very healthy on paper and slowly growing over time. And those are the companies that you should really be accumulating and piling into, because the people themselves, along with, good healthy numbers like we're seeing here with Lovesac, that's what could drive the stock back up to 80, 90, 100 in my opinion. So, but obviously to each their own. We all have our own opinions here. 4 beats in a row, as we see here. Look at that annual growth, 160 million, 230, 320, 500, north of 650 million last year. Even though profit margin dropped from about 9.2% down to 4.3%, the company still remained net income positive. And again, 650 million for the year in revenue, market cap 320. So you can easily double the stock and the market cap will be in line with yearly revenue, and you'd be looking at north of a $40 stock. And that's interesting as well, because if we come down here, look at this, 1-year price target north of 52. If you look at the forecast, you only have 4 analysts on it. All of them are giving it a strong buy. The lowest estimate is $36. a share. That is 15 points above a $20 stock. That's a 75% move. You can see that right there, almost 71%, okay, because we're 1 point above 20, but you get the idea. So 75% move. That's on the minimum estimate. The minimum estimate. The average between these analysts is, comes out, the median average is north of 50. And of course, the highest price target given is north of 60. Now, it may seem extreme. However, again, that's basically a triple. Right? So think about it. The company consistently keeps growing, right? We come down here, look, we switch over annually. If you look at it quarterly or annually, all you see is green when you look at these estimates and you look at what the company actually reported. So technically, the company is rolling on all cylinders. And again, what was I going to say? I just lost it. Oh, yes. So, yeah, they're saying it could go as high as 60, right? So if it goes to 60, that would triple. And that would bring the stock again from 21 up to 63, 64. But that, of course, would bring the market cap to like 950, 960 million, right? But last year, they brought in 650 million. So again, even if you triple it from where it is now, it would still only be trading about 1.5 times yearly revenue to market cap. So it still wouldn't even be overvalued, in my opinion. And again, that's tripling from this level, tripling. So a lot going on here, but I mean, if you just look at these graphics, you look at these numbers, right? They have their sectionals and sacks, and you can see over the years, again, even with like the 2020 stuff going on, it doesn't matter. Like, it just consistently keeps growing year over year consistently. And these are their accessories as well. You can see got up to 5.3, pulled back to 4.7, and then that's it. Just continued to grow and climb. So the company right now also only doing business in U.S., right? So we have no idea what can happen over the years. I mean, this U.S. revenue could double, triple easily over the next couple of years, and then they can also start potentially shipping it out to Canada or maybe even Mexico, even if they just keep it right here in North America. I mean, obviously the numbers are going to explode if they start doing that, because then you're going to have all the newer people, again, like we're having here in the U.S., who are finding the technology and just renewing their furniture. So they step in, they buy something from Lovesac, and then obviously if you branch it out to, Canada or even Mexico, it's going to be the same thing. Every year, these younger people are going to see what the couch can do. Like I said, wireless charging and all that crap. So I really do think it's only going to be a matter of time. However, if we look at the estimates, it looks like just slow growth here. Again, north of 700 million for the year 23, north of 800, almost 900, and then 960 million. So it's looking like slow growth, and obviously that whole slant I just gave about them expanding into the rest of North America probably is not factored in to this situation here, the fact that they're looking for slow growth, like I said, 50 to 100 million year over year. So chances are this entire time they're going to stay in the U.S., but, I mean, you never know. But as of right now, again, the company profitable, comes in, meets estimates. And again, you can see here the EPS for the year, $1.88, and last year was $1.77. So not even a big spike there. So that's definitely doable for the company to close out the year north of $1.88. And then, of course, you can see the profitability really starting to run up here, $2.82. So that's north of like a 30% move. And then north of $4 a share, and then north of $6 a share, right? So this company not only is expecting to consistently keep growing as it's been, right? Look at these beautiful graphics. But more importantly, as the revenue grows as well, they're just going to be more and more profitable, which is going to show on paper that the stock is going to appear more and more undervalued. So that's why a situation like this, again, all of the numbers aren't perfect. However, we do have some really good numbers here. If we look at the PE, it's the lowest it's been in years. Price to sales, lowest it's been in years. Negative cash flow right now, so there is no ratio. Price to book, only 1.67 times book. That is the lowest it's been, going all the way back to 2018. The enterprise value, again, we've kind of been going back and forth. Sometimes it's a good indicator. Sometimes, depending on if a stock was overinflated, it can be kind of a crappy indicator. However, even right now, you can see it's about 30% higher, about 33% higher than the current market cap of $320 million. So That would bring the stock up to about $27, $28. Yeah, I guess I can agree with that. You know, even looking at the chart before, we spoke about how running into earnings and potentially after good, healthy numbers, the stock could jump from 21 to 25. So, yeah, 27, yeah, that doesn't sound too crazy. The return on assets, as we see here, climbed all the way up to almost 17% and since pulled back to sub 7. However, you know, definitely not the lowest it's been, you know, and believe it or not, it's actually a lot harder than you would think to consistently have these numbers just consistently increasing year over year. That's why when you see it, it's such a beautiful green flag. However, I can understand, yeah, you know, it's not as high as it was, so they've been selling the stock down. However, look where they came from, right? So you can't beat them up too much. The return on equity, again, down over 50% year over year from 34.75% down to a little over 16, but again, higher than where it was before the big pop, and of course before that it was severely negative. So that's why, as long as these numbers basically stay positive, it's not too much of a red flag because the company was coming out of the gutter, so to speak, and everything was pretty negative across the board. Look at the gross margin here. You can see was just below 56%, got as low as 47.8, and then has kind of been slowly climbing, dipped down to 51.4, now back at 55.5. So is it the highest it's been? No. However, it's basically maintaining that 50-plus median average level, and of course has since climbed back up a few percentage points, almost back to the high of back in 2017. Operating margin. Beautiful numbers here. Look at this. Just negative for several years, and then of course you can see jumps into sub 5 there, right in the motorcycle going by, goes up to 7.7, a touch below 6%. Boom, now you have an explosion up to 16% almost on the operating margin. Phenomenal. Look at the EBITDA. Again, earnings before interest, taxes, depreciation, amortization. You can see slightly negative for 4 or 5 years in a row, and then it climbs positive, sub 7%, over 12%, back to 10.6%, not a big deal. Boom, almost doubles up to 19.4%. Phenomenal. Look at the net margin percentage. We looked at the profitability before, but again, you can see negative for several years and basically follows the same pattern as the EBITDA, and it jumps up to 4.5% and then 9.2%, down back to 4.3%, and has since popped up to north of 11.5%. So that's why some of these numbers could be viewed as positive, some of them could be viewed as negative. The inventory turnover, something we've been looking at, as you see, climbed up to about 4.25, was kind of maintaining that 4 level, and has since kind of just been slowly slipping down, 3.5, 2.9, 2.77. The asset turnover as well, as you see, is basically less than half of where it was all the way back in 2016, even 2017. Right, so just slowly slipping, had a little bump there, and then slowly slipping year over year. Reason being is because the company took on some debt. Right now, assets have increased. However, it's one of those rough situations where, as the debt climbs in the short term, you have to beat the stock up. However, in the long term, it might pay off in spades. Right, so you're kind of rolling the dice here, depending on whether you want to kind of play the stock in the short term or the long term. But overall, we looked at the change in cash flow. It's kind of bouncing around. It's all negative. Look at the assets slowly climbing, right, up to about $459 million as of last year. And again, the liabilities, of course, have been climbing as well. Big jump there in 21 and 22. So that's when they started to take on that debt, was really the last couple of years. And you can see still almost maintaining a little below a 2-to-1 ratio, but of course, you can go back here. Look at this. This is like 5-to-1. This is like 4-to-1, 3-to-1, and then it just kind of, now that's less than 2-to-1. But even though the liabilities have increased, you're closer to that 2-to-1 ratio. But whatever. Assets minus liabilities yields total equity. So the equity obviously has been increasing over the years, and you can see, look at the debt here, north of $100 million now taken on by the stock, by the company, really, but on the balance sheet now. And the book value per share, $12.72. That's why, I kind of understand with some of these negatives why they brought it down to new lows of $17.60. However, again, we looked at the trend lines and the way it bounced, and also the fact that you have earnings coming up within about T-minus 7 days. So, kind of justified that we should potentially have a little bit of a rally here. Again, you can see revenue increasing nicely, cost of goods increasing along with it. However, it's about 50% of revenue brought in, so that's yielding them, some very healthy gross profit there. and then the operating expenses themselves are really a huge chunk of the pie. And random motorcycle going by, and that brings the operating income down to a little over 39 million. However, basically the highest it's been. Right? So while, again, some of these numbers are potentially heading in the wrong direction, you do have a lot of metrics that are moving in the correct direction. And I think that's pretty much it. Again, you can see just consistent beats throughout the years. And yes, here is the debt, right? You can see, so going back to 2018, 31,000. And then, flat, no debt, boom, 113 million in 21, and now we're up to almost 158 million in 22. And of course, you see the cash flow goes negative, right? Cash and cash equivalents, 43 million was up to 92, 78, 45, 49. So that's the least amount of cash on hand going back 5 years. So that's why when you look at some of these negatives, you can kind of understand and justify why the stock has gone down. And what do I always say? Don't just trade and hope to get lucky. When a stock runs up or a stock crashes down, you need to find out the why. See how big of a why it is, and then recheck and reevaluate the stock to see if it was an overreaction or an underreaction in some cases. But again, this is showing assets over liabilities. Yeah, I don't know. A lot of motorcycles going by is really pissing me off. I might have to relocate the PC video recording area. But switching over here to stock charts, you can see the stock has basically been in free fall since going back to like mid-April. MACD consistently sliding, but you can see like a flattening and a potential curve coming. So that's why I'm saying, it just came down and hit these new bottoms. And now it's probably most likely going to remain flat and then slightly run up a couple of days before earnings. Again, earnings next week, June 7th. So that's why, again, these moving averages as well, 25.42 on the 200-day and 26 even on the 50-day, that's most likely where the stock is going to get back to. Maybe not going into earnings because, again, that's a pretty big run, but on positive earnings, the stock should, in my opinion, break through and get back to these moving averages of about 25.5, 26 even, we'll call it. And of course, going back to our trend line, if we zoom in here, you can see again, right side of the screen, 25.42, around that level, right? So even just getting back to that trend line, we're looking for a nice 20% run. And of course, with positive numbers, you never know. Oh, wait, very quickly, on the daily, you can see RSI. Look at that, dip down, sub 30, random ad. And you can see the big pop coming afterwards, and then of course RSI slowly slipped down 32. But again, in my opinion, I would be more of a buyer than a seller at this juncture here on Lovesac. I really do believe it should go up before it goes down. On the weekly, you can see the MACD turned and crossed and is starting to head to the downside here, but you can see the closes right at the Bollinger Band. So I'm telling you, it's building its stability. It is literally building its support levels as we speak, and is going to climb back up to that trend line, man. I'm telling you. You got the mid here, mid Bollinger Band 26.22 with the 50-day moving average 26.52. That's why I'm saying if these numbers come out good, it's going to get back to that trend line, potentially get above that long-term trend line, and then it's going to fight to get to this 50-day moving average of 26.52. And then, of course, switching back, you have the 50-day moving average on the daily of 26. So, that's why really any way you look at it, I personally do like it here. Now, again, that's just my opinion, but I do feel pretty good about it. Even if we double the stock really in value, get back to this 200-day moving average, we looked at the numbers, right? They can support it with the revenue they're bringing in. But again, one step at a time, one day, 1 week at a time, one earnings report at a time. And, in my opinion, it should get there, based on the trajectory we've been seeing here with the stock over the last couple of years. RSI a touch over 39. So, again, it got as low as about where it is now and then had a nice bounce. So that's why, in my opinion, I really don't know if the slight negatives are going to outweigh the healthy positives here. And I think we may have a winner on our hands here with Lovesac. It happened to look pretty good. Shout out to KC, that's who it was. KC in the Discord said, hey, why don't you take a look at Love? and it's looking pretty good. It is looking pretty good in my opinion. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop them down in the comments section. I'm usually very quick to reply. Like the video, thumbs up, algorithm, share the video, helps out the algorithm, helps me get more eyes on the channel. Subscribe to the channel, means a lot to me, watching the community grow. We've been going at this for a little over a year. We are significantly more correct than we are incorrect. I offer basically free advice in the Discord server if you guys ever want to join it. So again, I'm doing all this for you guys just because I want everyone to know not only about the knowledge that I can bring to the table and, of course, the way I can break down a stock and give you my slant on it, but more importantly, again, we have to learn from each other's mistakes. And, of course, looking back, hindsight is always 20/20, but knowing what we know now, looking back at the mistakes we did, right, we can always say, that was so silly, I should have did this, I could have did that, it would have been so much better, and that's really what I want to bring to the table. I want to try to lay out all the positives that you should keep in mind when looking at a stock or about to invest. And more importantly, I just want to alert you of any potential negatives or any traps that I personally fell into. Because anyone who doesn't learn from their mistakes moving forward is a fool, right? So that's why the most important thing, believe it or not, is a community, to have the conversation really bounce around in a bunch of different directions, have a really nice, healthy back and forth, and then we can all decide, okay, it seems like everyone's on board, we should buy this. Actually, this one kind of seems like crap. Maybe we should stay away from it. And the more you know, the better. Knowledge is power, right? There's a million slogans. I'm not going to get into it. But anyway, Stocks by the Numbers. Thank you guys for stopping by, and see you in the next one.